This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well, on the gold market, as you can see, price has shown some minor bounce yesterday. In fact, if you take a look at this consolidation market, is forming the inside trading sessions day by day. So this is almost the inside session for that candle. That's the same here. Yesterday's the Thanksgiving candle, also very small and stands inside of the previous one. So that's really tight consolidation without any significant bounce to the upside. The one moment that market just was able to achieve is just hitting and reaching the weekly pivot point that stands in this area and immediately has turned down again. Well, our major concern with today's candle, as we said yesterday, is the flirting with the MACD predictor, because the issue that market stands stably stands below this minor 618 target and doesn't show any attempt to retracement right back up and return right back above these lows, suggest the existence of the significant bearish power. So this here you can see even no attempt for the market to show some failure breakout or some of the Russian rinse returns right back, or at least reaching some deeper retracement, because right at this 3.8 resistance level stands the weekly pivot resistance one. So if even market could show some kind of the ABCD action to the minor level with the weekly pivot resistance, that was the normal retracement for hitting just the 618 extension. Even to this confluence, retracement would be normal. But take a look what is going on here. Market just stands in the very tight range. So that is suggests some existing of the real bearish power for the market. And as we said, MACD predictor. So here we could get the bearish stop grabber that will suggest the taking out of these lows at minimum, but also it could become the triggering point for downward continuation, as market has hit 618, coil around as respect of this area and continue move to the downside. We could expect move right back down to the 100% extension. Let's contract the chart. Oh, I don't have it on this chart, but anyway, it stands right at the lows, very close to the 1180, because that retracement was the 618. That's why the 100% will stand approximately here. Well, and today in fact we could get the pattern. So if we will get the bearish stop grabber, it could provide us really significant assistance with taking the position, because we will know the swing that we should stay with, and we will know where to place stop, and we will know where our minimum target. And also, as this pattern will suggest the taking out of these lows, we could move our stop to the break-even when this will happen, and just see what will happen later. Anyway, other words, this pattern, appearance of this pattern, will give us the huge assistance with the taking position, and with the possessing, with the possible reaching the 1180 area. On the hourly time frame chart, you could see just the nature of this weakness on the market. So because with our discussion of this retracement, we said that ABCD retracement is normal, because this is the first reversal swing, and the traders has the rule of thumb that buy first ABCD down and go. So that's some kind of the guardless triple to buy. And you can see that since yesterday, the market really has done an attempt of just bouncing out from this area. But take a look at the action. Although yesterday was the really thin market, that was the holiday, but in general that's not the action that we would like to see as the continuation with this thrust up. So we would like to see something of that sort when we got the reversal swing. But that's really some anemic action. It absolutely doesn't impress. And Although from the pure point of view, our major invalidation point is right here, because if market will make an attempt, continue move to the upside with this greater ABCD and has failed, return right back, taken out of the D point of this ABCD pattern, erase the potential regardless triple to buy. That will tell us about the weakness, and that will suggest that market probably already has started move to the downside. But even by taking this action, how market behaves here makes me think that market is really weak, and hardly we will see any continuation to the upside. We probably should be ready for development to the downside, but from the strict point of view, we need some real patterns. So one of them could become a stop grabber on the daily time frame chart, and another one, confirmation, will come if market will take out of these lows, the lows of the ABCD pattern to the downside. When this will happen, that will be the major part of the bearish confirmation of the market and the weakness of the market. So let's see what will happen today. Maybe today even also will be really lazy trades, because yesterday was the holiday, tomorrow will be the weekend. So I do not expect some real big action in the gold market. So let's see what will happen.